Good morning. I'm Tom Villeneuve. You're here to learn more about Social Security. The name of this seminar is Social Security and Asset Maximization to Meet Your Retirement Goals. I'm going to share my screen here now, but before I get too far along into the seminar, I think you should pause it and go get a paper and pen, and you can take some notes because you're going to have questions that you'll probably want to reach out to me. And there's no cost to reach out to me and ask questions. In fact, I'm expecting you to. Hopefully that's been enough time. So I'm going to go ahead and share my screen and we'll get started here on Social Security maximization. A registered investment advisor with Bene Retirement Solutions. So a little bit about my background. I was with New York Life for many years as an agent, as a registered investment advisor, and as a partner, which is middle management there, and development manager. I was in management outside of Philadelphia in the Valley Forge area for about 6 years. Beautiful part of the country. Gets a little hot for me, but beautiful nonetheless. There I taught agents and advisors retirement estate planning, all aspects of it. Not only teach in the classroom, but we go out and meet with people. It was great. I enjoyed it. Anyway, I came back to New Hampshire and took a job with Citizens Securities, which is part of Citizens Bank, as advisor there. When I came back to the area, I noticed in the area you either have insurance agents or you have brokers. Maybe they call themselves advisors, but they're brokers, asset gatherers. That's why I started Bene Retirement Solutions. It's an advisory company. We do financial planning. Yes, we can handle assets too, but many people, we just give them advice and plan with them, full financial plans. This is just a introduction to me and to my services focused on Social Security. Incidentally, I do one on Medicare as well. So this is our disclosure. The seminar is education in nature and is designed to give the seminar attendee a broad view of the current Social Security claiming information. It is not designed or intended to give specific legal or financial advice. Views expressed in this seminar reflect the opinion of me, the presenter. Incidentally, there are 2,700 rules for Social Security. Which ones pertain to you? Let's dive down memory lane and look at the history of Social Security. As many of you know, Social Security was started by FDR back in 1935. It was a fantastic concept. The average life expectancy was 62. And so that means half the population was dead before 62. What is it today? It's 86 and growing. So half the age lives beyond 62. Incidentally, 25% of the population lives into their 90s and 10 over 100. And all that's been happening very rapidly. As you can see here, the first benefit check went to Ida Mae Fuller of Massachusetts. And she got her monthly check of $22.54, which she had paid in for 1 3/4 years, $22.75 a year, and she got her $22.54 a month. It sounds pretty good, except when you look at the fact that this lady lived to be 100 years old. She received $22,888. Wow. Good thing most of them were dying off early. There were some changes, as you can see. COLAs, we'll go over those, happened in 1975. They started taxing Social Security with Ronald Reagan. Tip O'Neill did that to us, 50% of the benefit. And then Bill Clinton took it up to 85%. So how important is Social Security? Well, I tell you, right now, today, with what's going on with the financial markets, I mean, a little bit back here, people had lost 30, 40, and 50% of their portfolio. Luckily, it's come back. Question is, will it go down again? The market is very volatile. And if people don't take risk into account, there's going to be a lot of problems. Anyway, Social Security, getting back to it, doesn't vary with the market. Market can go to zero and Social Security will keep paying. It is a guaranteed benefit, totally paid for. Recipients have paid in, plus many that have died early, paid in for many years. It's self-funding. In 2019, the average benefit was $1,500 a month, or about 18,000 a year. Now, for the biggest share of the population, that's about 36% of their total retirement needs. Well, where did the rest of it come from? Well, it came from the retirement plans and savings. Last year in July, great headline on USA Today. Doing this one thing with your Social Security could mean losing $100,000 in retirement. Well, wow, that's a lot. What is that one thing? It's claiming at the wrong time can cost you over a lifetime. 111,000 is actually the figure. Study was conducted by this technology wealth management company, and only 4% of the population claims Social Security at the right time for financial optimization. Some people claim at different times based on health, but to optimize it financially, 4%. Here's kind of basics of Social Security 101. So there's 3 important ages. You can claim early at 62. You can claim at full retirement age. You can claim and get the maximum at age 70 currently. Now, this could change in the future. In fact, I read an article just a few weeks ago that Congress is thinking of mucking around with it again. We'll see. With all this spending that we're doing for the virus, things change. We'll have to see what they do. Anyway, questions and concerns. So how do you get your best benefit? And what do you mean by best benefit? The most money, the most combined income for you and your spouse? We'll see. How much will my benefit be? When is the best time for me to apply? And is Social Security going broke? Social Security can have a huge value, and claiming right really makes sense. So having all the information you need, knowing your break-even point, is essential. The first thing I want to go over is COLAs. Those are cost of living adjustments. Those are made, the government decides every year how much it should be. 2 years ago, it was 2.8%. This last year, 1.6%. It varies. But if you took 2.8% and you started out with this, a nice, simple, I'm making this easy for me for the math. If you were getting $2,000 a month, your 2.8%, 10 years later, your benefit is now not $2,000 a month, but $2,636. After 20 years, it's $3,474. And after 30 years, it's $4,580. That's a lot. That's a big growth. You can see why COLAs are very, very important. So if we look at it in pure dollars paid out, starting at a Social Security benefit of $2,000, how much would you receive in 10 years? Well, $304,000. Wow. 20 years, you can see, is $673. And in 30 years, it's $1.1 million. That's a lot of money. That's each, if you're married, each spouse. Wow, that's a lot of money. How do you get your Social Security benefits? Well, some of you have gotten it mailed to you. The government stopped mailing to everybody, but they do a few mailings. If you don't have it, you can go to socialsecurity.gov, My Statement. Make sure it says .gov. A lot of scammers out there today. When you go in, they're going to ask a few basic questions. You're in. If for some reason you can't get in, then you're going to have to call Social Security. I would recommend having a speakerphone and be doing something else because you'll be on hold a little bit. You could go down to the Social Security offices here in northern New England. We're really blessed that you can actually get in to Social Security offices pretty rapidly. You can talk to a person. They're usually kind. When I was in Philly, we would take a lunch because we'd be there all day. It was hard. It was a hard day. Let's talk about Social Security. The myth number 1, is Social Security going broke? Some of you heard this. You better save now because Social Security won't be there when you retire. In fact, I thought the very same thing, but it's not true. The balance of Social Security in 2017 was $2.8 trillion with a T. Now, after they paid out all the revenue in 2019, the revenue balance is $2.89 trillion. And that's not going down, but you can see that we're getting very close. In 2019, numbers got very close here. It's expected over the next few years that it will start tapping and drawing down from this. As the benefit goes down, they may extend Social Security, make you, who knows, go to 62. They've talked about all kinds of things. They may require more money from you, with the employee and the employer to pay in. We'll see what they do. Figuring out your Social Security benefit, the way they do it is they take your earnings over your working career. You know, what age you're going to start your benefit. They take your 35 inflation adjusted earning years, and there you go. Your benefit is increased each year if there is a cost of living adjustment. Now, there have been 3 years that it did not go up, incidentally, most recently. Applying for your benefit before full retirement. Remember, full retirement is the age you can maximize your Social Security. Now, for some, that full retirement age is 66. For others, it's getting real close to 67. You know, you'll see it in your form, 66 in 2 months. If you applied early, your benefit is cut, and I'm just going to work in this column because it's easier. You can see your benefits cut by 25%. You're only getting 75% of your benefit. Well, you know, there you go. If you went to full 66, you get 100%. So you can see, you know, it's between, you know, 6 and 8%. It changes each year. Well, what happens if you go longer than full retirement? Same thing happens. 100%, 108, 116, up to 132 if you're born, if your retirement age is 66. If you're younger and it's 67, the most you're going to get is 124%. Interesting how that works, isn't it? Social Security spousal benefits. When you're looking at your Social Security, whether you're divorced, widowed, or married, you want to always consider your spousal benefit. And the spousal benefit is the amount you would be entitled to from your spouse's working history or ex-spouse. In this case, you can see here, you're entitled to either half of your spouse's benefit or yours, whichever is greater. In this case, Dave's, his full, that PMI, full retirement age. So Dave's entitled to $2,400 a month. Amy is entitled to $1,000. Amy has a choice either to take in hers or half of Dave's. Wow, that's pretty good. Now, are you entitled to a spousal benefit like that? Well, yes. So during the bipartisan budget agreement in 2015, taking away restrictive applications means you could file, suspend, or restrict it and then take your spousal benefit. That's no longer there unless you were one of the fortunate ones that were born before January 2nd, 1954. If you were, call me, I'll go over it with you. Definitely worth it. So restricted application, the way it would work, if you're entitled, is Dave and Amy are both 66, same time, which does make the calculations easier. And Dave's entitled to $2,400 a month. Amy's entitled to $1,000 a month. Amy files for her benefit at 66. Dave files for his spousal benefit, so half of Amy's at the same time, and begins collecting $500. When Dave turns 70, he switches to his own benefit that's grown from $2,400 to now $3,400. Isn't that interesting? And Amy switches to her spousal benefit. So they went from earning $3,400 a month to $4,700. That is not inflation adjusted, incidentally. That's interesting. Anyone born early that's able to, call me up. So divorced spouses, same as being married. The rules are you have to be married 10 years, not 9, 10. Their spouse has to be receiving their benefit, meaning full retirement. So the ex-spouse can be 62. You can go early. And don't forget about divorce survivor benefits, just like a married spouse. An example would be Dave and Amy are married. Both are full retirement age. Dave's benefit is $2,000. Amy's is $1,200. Amy notified Social Security. This does not happen automatically. There's nothing that happens automatically with Social Security. And her $1,200 benefit is replaced by Dave's survivor benefit. The survivor benefit at age 60 or later, you can collect it. So even though Amy could be 60, she could get that. And if you haven't elected to let yours grow, then turn it on later, or vice versa. Survivor benefit is not available if widow or widower remarries before age 60. If you're 59 and a half thinking of getting married, don't for a couple more months. So myth 2, are you going to get the biggest claim if you wait to age 70? You know, a lot of people think that, but you need to consider a lot of different things claiming early. Do you need the income now? Well, are you going to live a long life? What's longevity in your family? Did your parents live a long time? How's your health? Your immediate family's health is not good. Do you really know your break-even point? You want to be informed. The math to calculate the break-even point with inflation is pretty complex. To be honest, I've even had CPAs come to me because the math it gets to be really cumbersome. I run it on a piece of software I have. That's given as an option for you later. After, you can reach out to me and I can do that for you and we can calculate that. So why delaying for your benefit could make sense? Well, at full retirement age, your benefit is $2,000 if you're born 54 or before. At age 62, it would have been $1,500. At age 70, it'd be $29,000. So that's almost 100% increase if you wait. That's assuming a 2.8% COLA. Social Security myth number 3, if I claim Social Security benefits early and invest income, I'll come out ahead rather than delaying to claim. That's interesting. You know, a lot of people think that. Usually when I do these seminars live, about half the people raise their hand, you know. Well, I got to say that's usually not true, especially if you did it a few years ago when the economy went south. You just lost half the money if you really did it. Unfortunately, most people, if they claim early, they spend it and they don't invest it. So it usually never works out. But in an upward trending market, it could possibly work out. There's an annual earnings test. Consider if you're working and want to claim Social Security between 62 and full retirement age, every dollar in benefit will have 50 cents, or in this case, for every $2 in benefit, you give away $1 to the government if you make over $17,640. That was the amount in 2019. So what happens if you're married? Well, you can double that. And if you make more than that, if you file jointly, every dollar above that will have 50 cents withheld. So that's why it's really critical to do all the calculations. You know, it's not done in a vacuum, your Social Security. You want to consider, do I have assets? Do I have income? Am I going to be working part-time? How will that flow together? I have many people that want a full retirement analysis of cash flow where they calculate in money coming in for Social Security. Maybe they work part-time. What will it look like? Will I have enough money? Am I going to run out of money? That seems to be the bottom line almost all the time. Will I run out of money? Or if my spouse dies, will I be impoverished? That's the biggest worry people have. Back on taxation of Social Security. Are Social Security benefits taxed? For higher income earners, are Social Security taxed? Are there ways to reduce or eliminate taxation? Although technically not taxed, Medicare premiums when you're 65 will automatically reduce your monthly Social Security check. But let's go over the taxation. How is Social Security taxed? If you're filing jointly and you're under $32,000, you're going to get no tax. So that's total income from pensions, everything. So what about if you're over 32 to 44? Well, then 50% of your Social Security is taxed. So Tom, explain that to me. Say you're at 32,000 and you made actually 36,000. Well, that $4,000 would have a 50% tax, would be subject to tax, 50% of it at your current tax rate. So don't get ahead of yourself. You can call your accountant, call me, and we can figure it out for you. What about if you make over 44? Well, then 85% of your benefit could be taxed at your current rate. The one to stay away from is filing separately and living with a spouse. Reducing taxation on Social Security benefits. Well, there's a lot of strategies for that. Muni bonds, I know they're not real popular in New Hampshire, but some states they are. Massachusetts more. Vermont more, they do not reduce your tax benefit to help you out here. When you have an IRA at age 72 now, you have to start your required minimum distributions, and that could put you in a higher bracket. So there's strategies to convert your IRAs, portions of it, into a Roth. Actually, there's a great strategy right now. If the market's down, it's a good time just to sweep them over to a Roth account at the same funds, and when they come back, you've saved all that money. It's worth talking to me about. You can delay your Social Security. You know, when you're dealing with these types of situations, there's a lot more questions. Like, what if you have a lot of assets and you want to, leave that for loved ones and reduce your taxes? Are there ways to do it? Yes, there's utilizing trusts and life insurance. You can actually leave big benefits for your family members. They're tax-free for them. It helps to reduce your taxes. Talk to me about it. Well, a Roth conversion, why does it work? Well, because when you put money in a Roth IRA, it is not taxed, the money in there anymore. Now it's taxed if you pull it out of your IRA. You have to pay the tax today and move it over. But why not pay it with smaller dollars? If it's gone down, it makes perfect sense. So this is assuming you think taxes are going up. Do you think taxes are going up? I mean, the government spent, I don't know, 4 or 5, I don't even know, I lost track, $1 trillion. They spent it. Well, someone's going to pay for that, and I think it's going to be us. If you're thinking they're going to go up, this is well worth considering. That you don't have to take RMDs if it's in an IRA, and it's a great benefit to leave to loved ones because it's not taxed. You want to talk to me about converting? Great. Social Security myth number 4. Well, the Social Security Administration will give you the best advice how to maximize your benefit. Now, a lot of people raise their hand when I ask this question. Do you think that? Yeah. No, they're not allowed to give you advice. They can only tell you the answer to the question you have. So you have to know the question to ask. And then they also can't factor in inflation, COLAs. So they can estimate individual benefits. They can tell you how much you're entitled to as long as you ask the right question. Woman asked me the other day, she calls up and says, how much could I get? And I asked her, and she'd been married 24. I said, what about your spousal benefit? Well, they never mentioned it at Social Security. That's common. They can't, like I said, project. They can't do scenarios. They can't give advice by law. And frankly, would you want them giving you advice? I don't know. Consider all your income streams before you claim Social Security. So Social Security is not a standalone investment stream. It is the most flexible of all income streams. Claiming at your right time is paramount. So don't forget about Social Security benefits for your spouse. Incidentally, if you listen to this seminar to the end, I will give you a code. So if you want me to run your benefits report with projections, we'll knock $25 off that. So it's normally $75. We'll put it down to $50 if you have the code that's at the end. The pillars of creating a comfortable retirement. You need to maximize your Social Security. You want to understand the ins and outs of Medicare and advantages, supplements, how those things work. Incidentally, I do another seminar that's recorded. You can listen to it anytime, same as this. It's worth it. It's a real complex. It is very complex. I've been licensed to sell life and health. And when I signed up my wife a few years back, I spent, I'm not joking, 14 hours digging around, trying to figure out all the ins and outs. Oh my goodness, all these letters, and they repeat the letters. I can help you with that. When and how to take your pension. Are you doing a pension max? Are you maximizing the pension for you, but leaving your wife out or your spouse impoverished? We can take and look at different ways to maximize that. Updating income producing assets like investments. A big strategy right now is it's not just how much you make each year, it's how much you're spending to keep the assets. It's not uncommon if you have your money at a bank or one of the guys on the corner to be spending 2%. I saw one person recently, he had an annuity, 3.8% a year. So think this through. Even if the market only goes down 10%, it's 10 plus 3.8%. That's how much he lost. Wow. Anyway, we can reduce those costs, at least let you know what they are. We have some special software that goes into each company and looks at each individual asset and will tell you what the true cost is. Unfortunately, it's not on your statement most of the time. They bury them. Someday they'll fix that. So do you have tangible assets, real estate property? How's that going to factor in? Are you working part-time? Boy, I tell you, one of the things that people fail to look at is when they retire, they kind of, well, two factors. They think, geez, I got this company I own, I'm going to sell it and I'm going to have all this money. Oof, doesn't always work out. The other is they don't consider, look, I'm not going to be able to handle sitting around at home. My neighbor here, he likes to build boats. So he works part-time at Home Depot for boat money. Boats are expensive, all the materials to build. And that keeps him going. But you work and you make 8, 10, 15,000 a year doing a job that you enjoy, that will change your whole retirement picture. But you need to factor it in. Questions you may have. When is the best time for me to claim? What will my benefit be? And what's the best way to coordinate my spousal benefits? Many people are confused with the differences in Social Security taxations and the earnings test. If I've already applied, do you have any options? Yes, you do. Could a Roth make sense for me? And where do I go from here? Well, I would encourage you, reach out to me with the questions. There's no cost for questions. If it's worthwhile, I'll let you know. We can run that report for you. It's very valuable. It's not always needed. In fact, I just talked to a woman the other day. She wanted to file for her benefits. Honestly, she doesn't need that report. And I told her, save your money. Find out what spousal benefit is, and it's an easy thing to figure out. When you claim your Social Security benefits, the factors that do factor in how much you'll get is what age, your spousal benefits, survivor benefits, divorce benefits, and other income sources. It all intertwines together. This is not done in a vacuum. The report I do, the understanding your Social Security and maximizing it, it's 18 to 24 pages long. It's well worth it, well worth it. It goes in, it shows you claiming your money and how much you'll get and what happens when it disappears. Gives you full instructions here. Tells you what day to go and apply. It's well worth it, well worth it. How important is Social Security? Very important. Makes up 36% of the average person's retirement, sometimes more. Don't procrastinate. So in order to get that $25 discount, you type in on the sheet under actions, you type in planning there or mention it to me and I will knock $25 off that plan. Reach out to me today. Don't procrastinate. Thank you for taking the time. Put your plan into action. Thank you very much. I really enjoyed doing this. Like I said, questions, please reach out to me. I'm Tom Villeneuve. I'd be happy to talk with you. Looking forward to it, in fact.